Welcome everyone to the July 2023 monthly update. Today we have a number of updates to go through for all of our projects in Texas and Arizona. A lot of big wins to talk about, a lot of movement in the last 60 days. We did miss the June update, so this is sort of 2 in 1. I was traveling in the Middle East for some capital raising. It was great. Stopped in France for a bit to enjoy that culture and sort of great food and all of that, and then went over to Israel to meet a number of investors and partners and opportunities. Successful trip. We have a lot brewing in that region. If you don't know, Israel is absolutely on fire in terms of the productivity and innovation, and so there's a lot of capital being floated around. So more to come on that. And today we have a number of things to talk about, but first I want to give you sort of a quick summary on where we see the market and how we're pivoting accordingly. So not a surprise, we're seeing a lot of headwind and hurdles within the commercial office. We called that back in Q1 of 21, we were saying there's a lot of turmoil coming in commercial office. I still think that has a long way to go. And you're seeing headline after headline, week after week of just lease cancellations. You're seeing now Westfield in downtown San Francisco pull out, which is a major staple. You're seeing hotels sell off. It's interesting to see these urban cores really deteriorate, especially as it relates to crime and everything else in between. But the commercial office is taking a bath. And so expect to see the halo effect of that, whether it be restaurants, hotels, entertainment, anything that's connected to the commercial office space in those cities will be hit by this, right? I do know some of my friends in Houston are connected to the space, and they're actually seeing opportunities to buy now at 20, 30 cents on the dollar. So the deals can still make sense, but you're seeing a lot of pain in that market. Multifamily, I still think there's some headwind here. There's a lot of capital that flooded these markets. If you think about a check size for a fund, they need to be 20, 30 million to $100 million. It's very hard to write those checks doing what we do, which is horizontal development, buying land. We usually don't hit that check size. What does and what did was multifamily. And so you saw a lot of these funds write these bigger checks to fund the multifamily. Well, if you looked, last year, there was a report, generally the units in market, 12% of them are multifamily. It hit around 20%. And that was the key sign to me that, hey, this market is going to be flooded with supply. Now, structurally and long term, the fundamentals are sound. I do think we have to get through the supply, and there's going to be a lot of turmoil there as well over the next 18 to 24 months as the recaps start to happen. And I've heard some news from other developers that they're essentially just pausing on distributions, kicking the can down the road, and really just hoping that they can refi with these debt funds. So again, we'll see what comes of that. On the capital side, we are still seeing, at least for us, a lot of success in our private raising. So 506B, we're seeing a lot of success on that. We're even seeing success in our 506C, which is more the public marketing for retail investors. We've been contemplating going institutional, but still get a little weary as it comes down to the control, and not the best of situations when you think about legally who has control in those institutional opportunities. So again, our capital stack is still doing quite well. We're getting a lot of capital from our partners, a lot of capital from investors, and I think part of it comes down to the fact that we're organized. We obviously have in-house engineering. We have these sort of conferences, or these reports rather. And so, I think money's still flowing, but it's only flowing to the best of the best operators. You're not going to see the naive first-time developer get the capital like you could in 21, 22. Those times have changed. So, and we'll get into that later. And then generally on the actual market itself, in terms of the lots and sort of our projects, it's interesting because I think most people thought that the interest rate being above 6-7% for a 30-year fixed would have plummeted the housing market. When what's interesting is, and no one really thought about this, at least I didn't think about this, 85% of the mortgages out there are under 5%. 60% are under 4%. Right? So now you have a 7% mortgage. The homes and the prices are still elevated, and they're not really coming down as much as you would think. And so for me to sell, let's say a 2.5% to 3.5% mortgage, and then go out there and try to find a move up situation, it doesn't really exist unless you move to a different city. And so a lot of the existing home owners who should be selling are simply not. What is the alternative? They're not going to leave their 2.5, 3.5% mortgage for 7% in a house that's equal to or lesser than, right? And so structurally, I don't see that changing for some time. You're going to need to see the Fed funds rate come down to probably 3%, 2.5, 3%. So that's years away. And so I think this is a systemic issue that we're going to see for a good 2 to 4 years in the market. But what does that mean for us? Well, you're seeing builders boom right now. They're seeing that demand transfer from existing homes to new homes, right? And so they're selling much faster than you would think. Right now, the average community in the United States is selling between 5 and 7 homes per month. That arguably should be closer to 2 to 4, given where the rates are, but they're more than double that. And so that's going to put more demand on lot supply going forward. And we know that right now lot supply is still under supply versus the demand. Builders, I think, are going through their lot positions. But again, this goes to back our theory that Q1, Q2 of 2024, expect to see a frenzy on lot buying. In fact, we're already hearing from some of the bigger builders, find me land, I need land, it's coming, we have demand that's strong and stable, where can I find land? So we're already seeing that demand from the builder shift to buying more lots. So again, right now we're in the muck of it in a lot of ways. This is what is expected. And so, many people say stay alive till 25. I think that's somewhat true. That's sort of been our theory as well, really mid 2024 through 2025, sort of the rebound. Okay, so with that said, let's get into the projects. So a lot of great movement this month across the board. So one of our earlier projects here in Lockhart, again, which is 25 minutes southeast of Austin, which, by the way, has been getting a ton of press recently with the industrial corridor. A lot of things are booming down there. We have a lot of land in this area. We're very bullish with the utilities, with the water, with the sewer. The city loves us. It's been great as of late. This deal, 89 acres, 411 lots, pretty straightforward. We are pretty darn close to getting this thing approved. So we are in final negotiations of construction plans. We expect to have those finalized by September, which means we will have shovel in the dirt by October. So we're already in discussions with our debt fund partners to talk about the financing of construction. And so we will be exiting this deal for investors in Q4. So we're trying to exit by September. It might be as late as October, November. We'll see. But we are coming up on an exit for investors there, and that was a phenomenal deal for them. 27% annual returns on that one. Really strong annual returns, 27%. So they got a hell of a deal on that one. Yeah, it's been great. So the reason this one matters is because it's phase one of our master community, which is a 600-acre master community in Lockhart, all kinds of things, medical campuses. We're building a new school, all sorts of retail and amphitheaters and everything else. So a really cool community in Lockhart. We're very proud of it. We're in lockstep with the city on this one, very, very close. So looking forward to getting this one up and running. It's important to note that, again, 411 lots, 200 of which are already in contract with 2 builders. We have the remaining claimed with 2 other builders. So we'll have 4 builders in this phase one. We expect to have all lots delivered by the end of 2025. Okay, so that's happening on that. Again, a little pricey on the cost to develop. We're looking at like $41,000 to $43,000 a lot to develop horizontal. That did come in 10 to 15% above what we expected, but such is the name of the game. Going into our deal in Temple, Pepper Creek Crossing, great location. Again, 75 acres. I think it's a smaller mixed-use concept, 10 of commercial, 16 or so of multifamily, and the rest, with that being 49 acres of single-family, which is yielding about 291 lots. So transparently, it's been tough to sell the lots. It's a tertiary market. Builders want to get there, but they're just not there yet. It's coming in the future. We know that. And so the lots are not claimed. We are considering buying them ourselves and building out the homes with a prominent builder in the area. We're still in negotiations with those numbers. They're a little tight, so we're trying to get through the negotiations to find a number that makes sense. Now, To the other tracks, I will say we personally are going to buy the commercial. That commercial is prime location for a flex warehouse, so we'll be buying that from the project here in the next 90 days. So we'll buy that, and then the multifamily is currently being marketed at $3.8 million, which is depends on how many doors you're looking at. 350 to 375 doors. You're looking at like ten to $11,000 per door, which is a phenomenal price, given that there's no impact fees in Temple. So it's a very attractive price. Again, multifamily, not the best timing given all the turmoil. So we're kind of in the situation where do we wait and sell it for a premium, or do we do a fire sale at like $3.2 million? It's a big difference. So we got to think about time value of money and sort of do we wait, do we not? So we'll have the final strategy here in the next 2-3 weeks. And so the next time we're talking in this update, you'll know exactly what we're doing. So that's a scoop. On the entitlement side, again, this is to be approved by September with the city, kind of very similar timing as Lockhart 89. We're currently negotiating construction plans with the city. We do expect those to continue to be somewhat smooth as it has been, and we're about 60 days out from approval on that, which means shovel in the dirt in October. So more to come on that. Generally, it's been a great project. The city's been easy to work with. It's a good location, 4 minutes from the Facebook site, that $800 million data warehouse. It's close to the airport by the sports complex. So it's a good area. It's just, it's hard to get the buzz going right now, and we're working through that. All right, Willow Creek or Seguin 80. Another standard deal, 80 acres. We had a headwind here, and that headwind was water. Now, that by far was the biggest risk. Again, we've been zoned, we've been annexed in, we're making great progress on all the concept plans, and we're looking good overall in the deal. The one question mark was the water, and we just got verbal from the city of Seguin that Spring Hill Water has water for us, which is great news, and we're going to have an agreement in place by August, so next month, to talk about when they'll be delivering that water. Now, in the deal, we had a buffer of 9 months. So assuming that once they say, yes, we'll give you water, we assume that it wouldn't be for another 9 months until they can give us a will serve letter. That's important for financing. So that very likely could be sped up by 2 quarters, which is a major boost in cost savings from a cost of capital standpoint. So we're making great strides there. There's a house on the property. We have decided to keep the house. So more to come on that. The one important thing, and still TBD, but what we have learned in a lot of these developments as the cost to develop goes up is you have to do bigger projects, roughly 150 to 200 acres, to capture the economies of scale and really make money in these deals. So some of the strategies that we're now employing is we find an anchor location like this, 80 acres, really a 2-phase deal. And then we expand around it by buying other parcels, okay? Because we're doing all the work, we're bringing the utilities to site, so we get the economies of scale as we expand the project site, right? So we're actually in negotiations for 122 acres just south of this location, which will be a tremendous value add to the project, likely result in a PID, which would be phenomenal for the economics. It allows us to do what we're good at, which is create fairly unique and innovative master communities in a mixed-use concept. So, and if that doesn't work, we're still in negotiations with 2 more tracts across the street. So more to come on that, but we're tracking to plan better than. If you recall, we raised $3.5 million on this project. We've have it verbally committed, but we've only taken on about $2 million, right? And so, from a cost of capital standpoint, we are managing this very tightly. We're in a good position with that. So more to come. I'm very excited about this project. Should be a good one if we get the additional 122 acres. So Pine Haven. So what a tremendous project. We actually just closed today, which is fantastic. So we had the contract for the property in last April, which is just phenomenal that we've had essentially 14 months to do all the work in entitlements. What's amazing about this is we close today, we'll have the final approvals in about 90 days, which is incredible. So, and by the way, when we pitched this deal to investors, we raised the capital in 9 days. 9 days in a very tough market where capital is very slow. So again, it just goes to show you that the 506B and C classes are still very attractive if you're an operator who's organized and can execute. So again, now we're not going to start construction until probably March or April of 24. So the investors in this deal will probably have a 9 to 12 month hold, and they'll get their capital, and then we go into construction. We just got our bids back from our partner up there called Mosaic. That's who we're partnering with on the horizontal. This is a tough market to do the work in, so we had to partner with someone. We're now getting our bids for our units. They are fantastic. Pricing at roughly $850 for some of the units, all the way to $1.2 million, 3-story, about 2,000 square feet, 4 balconies. I mean, it's really attractive what we're building out there. Very excited about this. We're flying the entire company out to Flagstaff for our offsite here in about 4 weeks to see the site, to go to the Grand Canyon, to really get familiar with the city. So we're very proud of what we're doing in Flagstaff, and we're one of the more unique developers out there. So more to come on that. So going into our master community. So again, we have 2 of these. We have one in Prairie Leap, which will likely be a 600-acre master community, 7-year project, where we are giving 20 acres for a school. We're doing a med campus. We're building about 1,600 lots. We're looking at about 300 units for apartments long-term, some retail, commercial. We're talking to a brewery. We're getting close to have a brewery entertainment center as well, right on there on the highway 80. So this one's very attractive. We just finalized our water agreement, which is fantastic. This is pretty wild. Again, our engineering firm, Viewpoint Engineering, when we first started the negotiations with the water provider, we were expecting to pay between $14 and $18 million to reserve all the water, which would have been a massive hit to the deal. We probably would have sold it right then, to be honest. And over the course of 3 months, the president at Viewpoint Engineering was able to negotiate that amount of money down to $250,000. So for any of you finance nerds out there, you know that a $14 to $16 million difference would have saved you in cost of capital roughly $4 million, $3 to $4 million as you held it, right? So a substantial carry cost reduction to the deal. Again, it really goes to show, and I say this all the time, an engineer is everything, right? It's anyone can do the surveys and the concept plans and the documents, sure, but a good engineer is going to be able to negotiate these nuances and understand the capital side as a developer, right? And that's what makes the best engineers the best, is that they have the EQ, they have the economics in their head. So that was a huge win. Again, sewer plant is going to be at the site, so that's there as well. The big question mark here is water, and we'll be tapping into a tower about a mile away. So all good there. The other community, I don't know, let's see here. Yeah, so the other community in Lockhart, again, 500 acres right behind Lockhart 89. It's going to be a similar format. We're finalizing negotiations with the city for a PID. Again, PID mud, 2 different instruments, both kind of with the same intent, which is to essentially take taxpayer dollars, refund you for the infrastructure development that you're doing to the community. They're hard to get. It takes a lot of negotiation. Usually, as a developer, you have to give something to the city that's attractive enough. What we have given is 20 acres in the one community, 40 acres in this one for a brand new school for them. They build the school, we give the land. We're also doing teacher housing, where we work with the builders, we bury the cost, and we provide 10 homes per year at cost for teachers, right? So that's one of our more passion things that we're trying to do, to be involved in the community. And so, again, these concepts are mixed use. They have a retail component, a medical office component. They'll have multifamily and a variety of houses and everything else in between. So both of them are very attractive. They're both 7 to 8 year projects. So looking forward to that. We're going to have an event here in Austin, as well as Dallas and Houston, to unveil these probably in Q3, Q4 of this year. So if you're on the list, stay tuned. We'll be sending you all the invite for those events. And that's what we have for this month. So again, generally we're making a lot of progress. We have a little bit of friction in Temple. We're trying to work that one out. Every other deal is on track, progressing well. We're well capitalized. We're hitting our markers, and you'll get more updates as we go. So any questions, you know where to find me, Tom at redoakvc.com, and we'll see you next month.